What's going on, everyone? This is Brendan from the Trading Fraternity. In today's video, I'm going to be talking about analyzing option orders. This tutorial was actually requested by one of our citizens after they seen my most recent swing trade in HCA. And for the guys that don't know what was going on with HCA, last week there was unusual option activity in the November 80 calls. So today I'm just going to basically walk through my thought process of why I took on this trade, and I'm going to give you guys other examples of other trades that were put on with unusual option activity or any kind of aggressive activity just in general. So just to kind of get things started here, for the guys that don't know about our chat room, we like to accumulate our option activity, our option information that we come across. It's pretty much from the guys on Twitter, like Speedy Calls, Wall Street Jesus, Open Outcry, Option Hawk, the guys that tweet out option information. Also, we like to gather our option information is from a gadget called Trade Flash on Thinkorswim, as you can see on my sidebar here. Unfortunately, it is after hours, so we can't see anything streamed through right now. But if you guys don't know what Trade Flash is, it is a gadget that gives market commentary throughout the day. They report if anything that's unusual in options, any unusual in stocks, any kind of breaking news. It comes right through here, and so that's nice to have. Anyways, getting back to the point with the TTF here, the main goal of our chat room is actually analyzing this information and essentially just build a thesis of why we should put on a trade or not. And that's very important when you guys trade, is to build a thesis. But anyways, let's get back to HCA here. All started with October 4th. Here, I'm actually pull up the actual tweets. I did screenshot it for us so we can go through it. So on October 4th, both Speedy Calls and Open Outcry are here. I'm gonna highlight October 4th. They reported November 80 calls, and as you see, Open Outcry, November 80 calls being bought at 9,800 at 85 cents. So you can see what their entry point is. So this was actually brought into our chat room because Paula, she actually worked there a couple of years ago, and she was pretty much giving us fundamental reasons why this is a great company overall in the healthcare sector. And so I brought it up on my chart, and it caught my attention because this was kind of a swing trade idea, that pretty much a swing trade setup that I essentially look for. I like to look for, stocks that are pretty much range bound for a good amount of time. Um, you know, Looking at the stock here, it's stayed above the $74 level, this price level here, for a good amount of time. And if you look at the volume profile, this is where it's been accumulating most of its volume here. It's at the lower end of the bell here, so it has a good amount of room to move up within its range. So I decided to actually analyze pretty much the option order itself. So what my next step is, just to show you guys again, it is the November 80s. So whenever, if there's a activity that I like that piques my interest, I look at the strike, which is 80s, and pretty much look at where the stock is right now. So right now, at that time, it was at $74, $75 range right there. So my first step is marking it on the chart itself. So what I do is I take an arrow, and where is the fourth here? I'm looking at my chart, and the fourth is right here, and they bought their first entry right there. So let me scale back out here so you can see. I like to look at the 1-year chart while doing this, so I'm seeing where their entry is, and like to give a whole visual to see if they're chasing a ramp, if they're just just buying. Pretty much this guy was buying essentially like my kind of setup of what I pretty much play. So you can see it right there. The next step is pretty much drawing where pretty much where the contract expires and what the strike is. So as you can see on my chart here, this is where the monthlies expire. And what I like to do is take an oval, and I'm going to go all the way up to the 80 strike and draw this. And if you guys can't really see that oval right there, what I'll do for you guys today is draw a price level at 80. So gives me a little visual of, okay, if this guy wants to exercise the contracts, it has to go up within this time frame all the way to at least 80 to exercise them for 100 shares, if not, or not. This just helps me build a thesis of what's going on, because okay, within this time frame, I like to look for a catalyst, and as you can see here in October, there is earnings, and that is a note that I want to point out to you guys, we are coming up into earnings season. So there's a lot of people that are playing an earnings run up, or they like to get a good position for earnings just overall in general. So like I said, that piqued my interest right there. Just looking at the chart wise, I decided to look at the actual options itself. So I'm gonna pull up my chain here, drag this down. Obviously the 80s are in the money right now, so it's total hindsight. These guys bought these at 85 cents, so I'm going to use the 85s as an example right here, and it's pretty much the same price level. So at the time, the guy bought it at 85 cents. And when I'm picking my options, I like to get a position, my swing position that can net me 200 to 300% return when it comes to this, when it comes to swing trades in general. And what I do is actually look at the out of the money contracts and I compare it to the ones that are in the money and see if they net me 200 to 300%. And this, this guy was actually pretty much the same kind of options I look for. So that piqued my interest right there. I was like, all right, cool. If these go in the money, they can give me at least a 200% return. So going back to the chart here, I decided to mark it in my trading journal just to keep an eye on it. So let me just bring this in, zoom it back in here. As you see, for a day, nothing really happened. And I'm like, okay, I'll keep it on my watch list, see, and I have the actual options itself and I'm keeping an eye on it. Then all of a sudden on the 6th, I'm gonna pull back up the tweets here. Someone scooped up the November 80s, 12,000 for $1. So someone bought $1,200,000 worth of these calls, the same exact calls that were being purchased on the 4th. So I was like, all right, that grabbed my attention right there. Someone pretty much was loading up on the same contracts. So as you see, Joe Tape Reader even said on the 6 here, HCA 80 calls over 1 million there. And even this kid right here noticed that there was a lot of bullish bets in hospitals lately, you know what I mean? When it came to CYJH, THC, HCA. So that pretty much, noted to me that there could be a potential sector rotation. So I was like, all right, cool. That's where I decided to get my entry. I actually got a better fill than the second guy for $1. Here, I'm pulled back up. He got filled for $1. I got filled at 90 cents on a dip. I'm like, okay, I got a little basket of them. So the whole day, the next day, nothing really happened. It did dip below between 74. I didn't really panic too much about it because it didn't close underneath the 74. Came back up, and all of a sudden it just started getting some flow. It started ramping up, and my thesis was kind of right here for kind of a pre-earnings run up. And on, I guess you could say it's kind of lucky here. On the 13th, and I'm gonna pull up the tweets again. On the 13th here, Wall Street Chatter tweets out here that the HCA was actually upgraded to overweight by KeyBank Capital, which caused a nice little rally there. And actually, let me walk you through of what I did here when it came to this position. I sold half at $1.95. When it comes to my swing trading, when it comes to options, I like to sell half at 100% whenever I can, whenever I can, because I like to take the risk off and like to basically play the trade for free. So, and I wasn't really, planning this trade would run up that quickly. No, I was thinking maybe another week or so it would run up. But so I sold half at $1.95. And also, as you guys, most of people know in the chat room, I'm not a real breakout trader. So I sold out right here because there could be potential, like a little pullback right there at this price level. So I sold out $1.95, half of it, I mean. And I got some, got some more flow and actually reached in the money that day. And I closed the rest at 270. And it's kind of a funny story when it comes to this, kind of like my rule. Like when it came to this trade, I wanted to just sell out when it hit in the money. That's just basically my exit plan. And that's very important. Like you guys probably seen in the other videos, when it comes to trading, you got to create an exit plan, because I've had more winners become losers because I didn't have an exit plan. So I decided to take my 200% and just run. And it's kind of funny. I'm going to pull up the 10-day chart here. 10-day 1 hour. For 3 hours, it stayed actually below the 80 level. And I was just waiting for it to like pop up at least 10 cents to get into 80. And I was like, all right, this is actually kind of silly. So I decided just to close the rest at $2.70. Hey, it did close over 80. And it's all good. It's just stagnant. It's just basically just chilling up here. I don't really care. Trade's over for me. You know what I mean? It reached my exit plan within a week. I was planning on holding these for a good amount of time, so I decided to take advantage of the option premiums that were gaining there and just get out. And because over time, it does, options do lose value. So I booked my profits and I'm done. The trade's over with. This thing can still rip on. Okay, cool. I'll reevaluate if there's any more activity or not. And if it goes back down, it's all good. I'm all out of it. So that's pretty much explains my HCA trade. So what I'm going to do is I'm going to talk about some other examples. So let me pull up Goldman Sachs, actually. This is a total hindsight trade. I wish I played this one. I was kind of mad that I even marked it on my chart too because I saw it during the day and my plan was, okay, I want to get a better entry than this guy. I actually have the Borderelli research article here. So let's take a look at this here. So some trader bought 5,000 of the November 170 calls for 240. And at that time, I even marked it on my calendar, not calendar, my chart here, right here. It was pretty much trading between 162 to 164, 162, 163 area here. And they bought, again, just like my other trade, what I look for is out of the money contracts for a good amount of time, November 170s. So just to kind of, I'll do it for this time too, November 170. So I'll mark it right here. And they have to, let me scale back so it's better looking here. They have to at least get over here within this, like I said, I'm a range trader, which within this time frame, at least get up to here. And we're coming into earnings season. There was a lot of bank flow, good dip buy opportunity here after it did. And I didn't buy it because, like I said, I wanted to get a better entry. And the stock just continued to rip. And looking at the, actually, let's look at the actual options itself, November's. And I said these are the 170s, right? So the guy bought them for $2.40, and now the guy caught a double, 100% or more. But at the time, looking at here, I'm gonna actually pull up the option chart of it, the 170s, send this to the chart. So these were trading around $6 to $7, and at that time, that piqued my interest. I'm like, okay, if these hit 170 in the money, you're going to get a 200 to 300% return. Just like I told you last time, this was kind of the setup that I look for when it comes to swing trade, when it comes to in the money. Unfortunately, I missed it. It's all good. I can't have FOMO about it. You know what I mean? So there's always trades that always happen. You guys will learn that. And as you can see right here, got in the money, did pull back. And again, this is the main reason why I do not play breakouts, because I've seen more failed breakouts than actual breakouts. As you can see, just traded the range, came back down, it's up again here. Maybe it'll continue, but I know there were some traders up here that bought for a breakout and kind of got smoked right here. So going back to it, let me pull up another example, which was actually my favorite one last week. No, I want to say a couple weeks ago, actually. So what I'll do is pause this and let me just prepare for this, okay, guys? All right, so the next trade I want to go over is Netflix here, and I actually screenshotted all of Wall Street Jesus's tweet here, and it actually started with on September 8th, October bull sweeper detected. In his terminology, when it comes to sweeper, he says means aggressive action in the option. So let me mark this on September 8th here, and I want to actually look at the chart itself here. And as you can see here, this is kind of like one of my setups that I look for when it comes to a swing trade. And I actually noted Netflix for a while because it was a lagger of the FANG stocks in general. Facebook, Amazon, and Google were all ripping, and Netflix seemed to be stuck in the mud because there is still concerns of user growth when it comes to the company, and it was not following through with the whole tech sector in general. And so I was like, okay, this is the delay on it, and maybe you can get some flow in it. And obviously we see that there is a psychological price level right here at 100 right there that it did struggle with a few times. And so as we saw noted, I actually didn't put it in there. So let me put this arrow in there on September 8th. was the first initial action, which was right here, which is right above, right underneath the $100 level. So I was thinking, okay, this guy's going for, in October, he's going for a nice swing. And as you saw during that time, there is a catalyst for earnings. And, like I said, with all the other stocks, we are coming up into earnings season. So you are going to see some bets being placed pre-earnings, for the run up and into earnings. So anyways, getting back to this, I'll pull up these tweets again. It started with the October bull sweeper right there. It did dip down. And on the 13th, September 13th, he says there was a sharp player detected in March calls. So these guys, not only there was a guy that was buying October, there was a different guy, it could have been the same guy, who knows, was buying March calls, which was definitely further out, further dated. So this guy's going for a nice swing trade, for March. And I did mark that right there. And the next day that there was actually more action in there, September 14th, and Jesus even noticed, he's saying, we got to keep an eye on those Netflix Sharpies. Every time they place a bet, they get news the next day and disguise it by going so far out. And it's kind of funny, we'll keep that on note because there was news eventually on this here. So as you can see, I actually purchased the October 105s because that was the initial activity back here in September. I got myself, it was just underneath a half a position, my usual position when it comes to trading. I got a little, I guess you could say, a feeler of the October 105s. And it didn't work out at first because there was a pullback and it was down here. And I was telling the guys, it's like, I'm not going to add until this thing gets over 100. You know what I mean? I have time on my contracts right now. I'm just going to let it swing and, plan accordingly to it. And it was kind of funny. September 23rd, as you can see on this dip here, September 23rd. So this guy bought the September, it was weeklies, you know what I mean? The September 30s. They expired in the 30s and they were a short-term trade, 94 and a half, put $500,000 in there. This guy was expecting a short-term momentum trade. To me, that says it's a short-term momentum trade because he bought the 94 and a halves. They were basically at the money, basically saying that's not going further below that, and he's going to basically play the run-up into expiration, or he could just do a quick flip on them if he wanted to, make a quick $500,000. And so, of course, that's when some of the guys in the chat room did buy right here, and they did play the run-up with it. They did get some Octobers and all that, and then it's kind of funny here, going back to this tweet, that there was eventually news on the 30th, not the 30th, October 3rd, there was news that Disney was going to buy Netflix, which caused this huge spike up over 100, and it did eventually reach the 102, 103 right there that day. And it was kind of funny because a lot of the guys were like, okay, Brennan, are you going to add to your position now because it's finally over $100? Remember, we were talking about that psychological number at 100 there. And I was like, I don't buy this news at all. I mean, the reason why I didn't buy the news was because it was not covered on major news networks like CNBC. It wasn't covered on Bloomberg, anything like that. It was not covered. And during that time, it was actually the same time as when Twitter was getting all the speculation for the buyout and it was going nuts. And all the news networks were covering tick by tick on Twitter of whether if it was going to be bought out or not. But this is kind of a big, buyout news too. If Disney, a major company like Disney, to buy Netflix out, that's a huge thing. And that would be blasted over CNBC also. But it didn't. The only people that covered it was Benzinga, and a lot of the guys know my personal opinion on Benzinga. I think they're sketchy as fuck. I'm sorry about my language, but I really think they're sketchy. I can go on a separate rant about that sometime. But anyways, going back to the trade here, I did not add to it. It's okay. A couple days later, I did get my Octobers in the money. I did sell out. It wasn't, obviously I should have, total hindsight, I could have bought more here. I could have bought more when it got over 100. But, I booked my profits. I got out of my exit and got out. And I want to note something here. It was kind of funny when it came to this was at this time, I even marked down my chart here. October 5th, there was a sharp Jan bull sweeper. So someone was buying Januaries, and a lot of the people that totally missed this whole move, they saw that action right there. They were like, all right, I want to buy contracts. And I was like, guys, okay, it is a lot of money that is going into these January's, because I forgot, I think even Speedy Calls even tweeted out too. They did, we were able to add it up, and it was a lot of money. And I was like, guys, you know, to me, seeing this, if you're reading this, it's too late, basically. That's what I'm seeing it. Because a most common option strategy when it comes to option traders, they obviously get their initial position right here, and once they finally get in, they like to roll their position out. So they like to take their profits and they roll either their initial investment into a further dated strike and further out, just further out in general, so they can play. This guy can play the earnings for free on this. And there was people in our chat room, they wanted to buy right here, and I was just like, you're gonna tell a January sweeper just because it was a lot of money. And that's one thing I want to emphasize with you guys too. Do not tell the order because it is a lot of money, because obviously it's total hindsight here. Look what happened. There was no news at all when it came to Disney and Netflix. It looks like complete bullshit like always. Came right back down, and now it's okay, it's above 100 right here. But if you were to buy because there was a huge action right here, you would have gotten smoked. You would have gotten, like, your calls would have been max pain. If you got weeklies, you would have been just hammered. You know what I mean? You'd have been definitely hurting on that, let's just say. So yeah, you guys, I guess you guys can play earnings right here. Actually, earnings is Monday right here, so you can't. I mean, if you want to do that, you can. But I'm not an earnings trader at all. I like to play the run ups. I make, from my my previous experience, I've made more money on the run ups than actually earnings itself, because earnings is a coin flip. But anyways, it's a separate rant itself. But anyways, that kind of summarizes my options analysis in general. So I guess the main points I want you guys to walk away with when it comes to this is, when you're looking at option activity, you want to look at the time frame to determine whether if it's a short-term or a long-term trade, whether if it's a weekly trade or monthly contract, whether if it's a swing trade, you know what I mean. You want to look at the strike. You want to see how far away of it is being in the money, and you want to kind of compare it with the time frame in general. Like I told you with the September guy there. Where is he? Where's the tweets that I just had? Sorry about that. The September guys, he was playing the weeklies, and he bought in the money, basically at the money, because he was saying like, all right, I'm gonna go for that delta trade, and and I can exercise these if I want to, or I'm saying that it's not gonna go lower than that. Especially if he's playing like with that heavy amount of money. You know what I mean? So you want to determine a thesis behind the trade with the strike and the time frame, and you want to look